Bitcoin has been pulled around by the main markets. At the current time, the S&P 500 has been retracing, and we've seen risk-off activity inside the crypto market for some time. But the key to remember is that the S&P 500 or the major market indices such as the Nasdaq, the Russell, and also the Dow give us some indication as to where Bitcoin and crypto markets are going. Just zooming in a little bit, it's all about understanding intercorrelation and interconnection. We actually have seen that Bitcoin has been weakening for some time. Around the 24th of January was the time that Bitcoin started to put in lower highs, and we've seen that downtrend has been continuing. Now, of course, people will say it's got to keep on going down, but this is not necessarily the case. What we need to do is to look at the S&P 500 structurally. Also, we need to look at it from a retail perspective. Popping on the 200 period moving average, we've seen the S&P 500 break through all its moving averages and come down and bounce off the 200 period. A lot of people will be expecting follow through and a bounce up at this time. But is that confirmed by the futures? Let's have a look. Now, of course, if the S&P 500 comes up, that's going to be very good right across the board, and especially for crypto. Having a look at the futures across the main markets, we can see the S&P 500 futures are indeed turning around. They're starting to reflect back. What about the Nasdaq futures? Well, they're looking pretty good as well. At least it's not down here. We've seen a technical bounce of V-shaped recovery, so that is realistically quite good. What about the Dow? It's printing a degree of strength. What about the Russell? Also showing strength. When it comes to stacking probabilities, we need to look through the charts to get a feeling on if the charts are telling us upward or downward price momentum is in the future. And so far through the futures of the major market indices, we're seeing a degree of upward momentum. That's a big tick. Now, why did Bitcoin come down here? I'll just zoom in a little bit. We can see even though the S&P 500 is flattening out, and also the Nasdaq, and also the Russell, and also the Dow. Not so for Bitcoin. Bitcoin has been retracing. What could explain this? There was a huge degree of front running inside the crypto market as the crypto summit with a focus on discussing strategic reserves came around. And President Trump said, yep, we're going to create a strategic reserve for Bitcoin with the seized assets. In other words, all those FBI raids and all those Bitcoins that were confiscated from illegal activities will form a budget neutral strategy, as in they're not going to be selling it. And that's actually pretty good news because it explains to different countries all around the world, well, if we're not selling it, why the heck are you? That created a bit of dismay inside the crypto market. And what's happened since there, we've had a cut under and negative price momentum. And well done to everybody that said, see you in the last video. That is exactly what it was. It was a cut under occurring here. And when we get a cut under, it's not good for the chart that we look at. We had a fairly substantial cut under here, which caused a great degree of grief. But crypto is very forgiving, and this particular upsurge inside Bitcoin and of course across the crypto market was to do with a bit of euphoria about the crypto summit that unfortunately didn't materialize. Our community focuses on being an institution of one. Now, why did Bitcoin's chart just bounce along here? Why did it do this? The answer is structure. So just putting on the structural indicator, what we can see here is that we had a great degree of structure just above that 85,728 mark. As soon as that created a structural failure, we had negative structural attraction down to the 84,204. But unfortunately, because this consolidated for such a long period of time, it was likely to overshoot, structurally overshoot, and we've seen it get caught around the 83,100. It's now coming down to test 81,866. It's very important to be aware of these negative CTKS gaps that exist inside structure. price can move very, very quickly, either down or, don't forget, it can move straight back up again. One thing that can be really helpful for you to look at is the concept. Is the market cutting over at the current time? Are we seeing any signs of life? Is it significant? These kind of things are really good for you to keep in mind. And one way you can tell if a cut over or a cut under is gaining strength is to look at liquidations, especially from a structural perspective. From the 12-hour perspective, we can see a lot of liquidations up here around the 85,845 mark. What about on the 24-hour period, up at nearly 87,000, 48? And you notice there's not a lot of lower level liquidations. So with this in mind, a lot of people would anticipate a reflection up. So let's have a look at 87,300 roughly on the 3-day. Where are we looking there? Around that 87,164, just coinciding with this peak, and a little bit higher up around that 91,400 mark. And again, we're not seeing a lot of lower liquidation levels. So basically, smart money always hunts for liquidity. It's looking for all of these juicy liquidation levels. We've got one at 87,125, up at around 91,734, and up higher around the 94,000 mark. It's a fairly scattered level below that. So what you can see is it is, at the current time, at least on a short-term perspective, heavily weighted to the upside. So we could get some big upside momentum here, and that would fool everybody, except us. And again, looking at the 2-week, we can see up around that 95,200, but not a lot underneath. What about the 1 month? As we go higher and higher, well, longer and longer into the past, we can see that there are particular levels of liquidity lower, but the major ones are higher, here around the 100,000. So from my analysis of this, around the 87,000 is quite a good confluence of liquidation levels. If we get a push up to 87 and then just push through that to around 91.5, if we're going down, it's because of the longer time frames. And if we do, 72,000 could be on the cards. Remember, price is always moving in a wave. And if you're a true investor on the red days, you want to get really excited. We know that Bitcoin is eventually going to overtake the market cap of gold. And when we look at Bitcoin, $1.65 trillion versus 20, well, that's a pretty conservative 10x plus in there. What does that mean, Ken? Well, it means that Bitcoin is likely in the future to trade over $1 million. Now, what does that mean? Are you getting concerned about the prices on crypto, especially Bitcoin? I'm not. I'm just relishing this. This is awesome. If you thought that you missed Bitcoin when it was above $100,000, it is on sale now. Whoa, fantastic. And it always pays to just keep in mind, price is always moving in a wave. It's always going up and down, up and down. It just can't help itself. But we can profit from that. I discuss extensively in the profiting course that when you get a cut under, it's not a bad idea to pare your trades back or at least get out of certain trades and just wait till a cut over occurs. What we can see on the upper bank, we've got Bitcoin. So we've seen a very, very big drawdown inside the crypto market. And the memes are always the most sensitive to risk. That's why we keep our eyes on them, because they're like the canary of the canary in the coal mine. In other words, they're the canary's canary. Okay, so we can see the Floki, Doge, and WIF are all lower bank. Bitcoin, Ethereum, Bitcoin Cash, and Binance Coin are upper bank. Now, a lot of people would say, was it a sell the rumor, buy the rumor, sell the news kind of fact? It's none of those things. It's just structure. If you're getting a cut under on Bitcoin, please be aware this means that negative price momentum inside the alts will be severe. A severely good bargain, that is. It's important that you don't get flustered by negative or red price action. All the institutions need to do is to make the price go down, and all the retail will go fleeing, scattering to the exits. But not the professionals. The professionals get on the dance floor when everybody has left it. Because the institutions are there just gobbling up everything that everybody is selling. Therefore, getting institutional thinking is definitely the thing that you need to do. And we do that through looking at the cheat sheet, looking at the structure, looking at the momentum, looking at the intercorrelation and interconnection. Make sure that you keep on doing your cheat sheet. If you do it properly, well, at least through the profiting course methodology, you'll be able to complete it in around 10 minutes. The thing to note from a structural perspective, when looking at the S&P 500, we do have structure that's playing through on the S&P 500. We've already tapped this lower level around the 56.66 mark. If we manage to come up, we would expect this gravitational well around the 57.80 mark to be the first initial target. If we manage to get above that, we would expect around the 59.30 mark. Please let me know in the comments, where do you anticipate that we're heading? Are we heading lower or are we heading higher? And also remember, keep your eyes on structure. Structure is the way that they are the safety nets. So structural levels are safety nets and also ceilings inside price action. We see it again and again and again. In fact, we've proven it out for years and years and years on this channel. Therefore, keep your eyes on the index futures and just see how that's playing out. If they start to strengthen, we would anticipate the crypto market to turn around. If they start to come down again, we would expect the crypto market to weaken. Keep on stacking those probabilities, everyone. Have a great day or night ahead, my friends. And Kate and I look forward to catching up with you again in the next video. Bye for now.